Hi there, welcome to Neppy Invests. I'm your host Neppy, and I love to invest. Today we're going to be talking about a company you might have heard about in the last few weeks because they've just IPO'd on the New York Stock Exchange last week, and they've created quite a bit of buzz, a bit of talk in the investment field. There've been a bit of buzz for a few years at least. I did hear about this company 2 years ago. And the first thing that actually drew me to their company was their name, Snowflake. As a meteorologist by trade, I am interested in that sort of thing, snowflakes. I love snow, but that's what drew me in. I didn't really research the company and to know what they do until recently when I did hear they were going to IPO. Very exciting what they did on the opening day. You might have heard about how much they increased on their first day of trading, and let's get into that right now. So the IPO price was $120, and they immediately opened up greater than 100% from that. So those who did take part in the IPO, for instance, Warren Buffett and his firm Berkshire Hathaway did IPO or take some IPO, and Salesforce have been a long-term supporter of Snowflake. So they did very well with the IPO. It's the biggest software IPO on record. They raised $3.4 billion. That's a fair bit of money that they raised. And I'll get into the reason why financially why there's all this excitement about them too. But at $254, they do have a market cap of $70 billion. So that's fairly large. And they're not even making a profit yet. So let's get into that in a minute. But what do they do? So here's a quote from one of their CEOs from 2018. So they've changed CEOs since then. And he just said they're disrupting the data warehouse industry on the way to enabling the data economy. So data warehouses are just designed to integrate big data sets from many sources, process it, and then deliver a report or analysis on demand. So traditionally, data warehouses have been sort of on premises, and that's where Snowflake and the cloud enter the scene. So this is my definition of what Snowflake do, a very simplified definition, but I do believe you have to sort of explain what a company does in one very succinct sentence and to not fully understand them, but to have a sort of an inkling what they do. So Snowflake just provide data storage, compute, and analytics service in the cloud. So essentially, they provide data warehouse in the cloud. And here we have, so data warehouse as a service, so DWAAS. Snowflake refer to themselves as software as a service, so I'm a big fan of that. But in effect, they just provide that software to the clients, and that software acts as a data warehouse. So you can just see here, no hardware or software to install, configure, or manage. So that's all their clients. Don't have to worry about that. Snowflake handles all that maintenance and management. It's run completely on the public cloud infrastructure. So that means Amazon Web Services, Microsoft Azure, Google Cloud. It's very easily scalable, more flexible. So for instance, in traditional sense or traditional data warehouse, if you were growing quickly and you needed more room for your data warehouse, you might have to move to a new building, design a new room, enter into a new contract with the landlords, that sort of thing. With the data warehouse as a service, it's much more scalable. If you need more resources, that's easily handled by Snowflake. It's faster. So I've got a quote here from someone from Notre Dame who just mentions the speed of it, and it's easy to use. So lots of advantages for what Snowflake do. I won't get into what sets them apart from all the other data warehouse as a service, but I think it has something to do with they sort of separate their storage, compute, and services. They decouple it. So in the traditional sense or traditional data warehouse, it's all tightly coupled, but they've sort of decoupled the storage, compute, and services, and that's one of the main advantages of Snowflake. Another thing is network effects, so very easy to exchange data with other Snowflake users. That's one thing I did read about. But why the excitement? So on the left-hand side, this is just from their prospectus. We just see the revenue growth quarter on quarter here. It's going back from 2019 all the way to the latest quarter. So it's gone from $29 million to $133 million. fairly significant growth there, growing very quickly. In the small writing down the bottom, they do mention their losses, and I'll get into that to a second, but they don't want to really highlight how much money they are losing. So in the past year or so, looking back at the fiscal year, 2019 to 2020, they grew from $97 million to $265 million in revenue. So that's 174% growth. So no matter even if they're making a loss right now, phenomenal revenue growth. And that's one of the main things they do look at to judge how they're doing. The next thing there is net revenue retention rate. So 158%. What that means is the customers they do have are tending to spend more. So for instance, if they have a customer spending $1,000 last year, this year they're spending $1,580. That's all that means. And that's a good thing, because if you're not getting new customers, at least the customers you're getting are spending more. But they are getting new customers at a phenomenal rate also. So they've increased their customer base by double in the past year. So from 1,547 to 3,117. So if you don't understand exactly what they do, the numbers speak for themselves. They're rapidly increasing their business. That's all you can say right here. So I've just gone through again, just going through their prospectus and just looking at some of the numbers here in their prospectus, comparing 2019 to 2020. Mentioned the revenue is up by that huge amount. They've also massively increased their sales and marketing from $125 million to $294 million. So you can see that if you compare that to revenue, their sales and marketing costs are greater than revenue by $30 million last year and this year. So they're sort of increasing their spending on sales and marketing by the rate they're increasing the revenue. And their research and development has gone up, but nowhere near as quickly as sales and marketing. So net loss is the big thing here. So they went from a net loss of $178 million to $348 million. So at the moment, you can sort of see why they needed to IPO and raise capital. They've done a few raising of capital through the last few years. I think the last one earlier this year put the value of the Snowflake at $12 billion. So they've definitely increased their valuation since then based off this IPO. So after the income statement, just one of the cash flow. So operating cash flow is the one thing I look for here, and I'll just put the numbers there. So they've gone from operating cash flow negative 143 million to negative 176. So not as bad as the net loss, but they're still bleeding a lot of cash. And it's a good thing they've raised $3.4 billion. So, if they continue bleeding cash at this rate, that's still over 20 years of run rate going for them. So the big question I have is, what are they going to do with the extra capital? So $3.4 billion is a lot of money. Just highlighted some things here they've mentioned in their prospectus. So I did go through this prospectus trying to find out what their goals are with this extra money. I would have preferred some specific goals instead of what they've got here, which is very wishy-washy. So they've mentioned the whole purpose of this was really the financial flexibility. So I sort of understand that when you have a lot of cash on hand, it increases your flexibility. You can do so much more with it. But their capital allocation moving forward is what I want to know. So when you talk about capital allocation, talk about dividends or share buybacks, which they definitely won't do. You could be talking about acquisitions or increasing money on research and development, sales and marketing, that sort of thing. So the main things I'll be looking at is, are they thinking about doing any acquisitions, which they do mention here, or they're putting that money to research, development, operating expenses, and they also mention that there. So they do say, we currently do not know what we're going to do with it, the money. At this moment, it's going to go to working capital, operating expenses, and capital expenditures. So that sort of means they might increase their sales and marketing, they might increase their research and development, which probably is okay with me, because if they increase that, I think their revenue will increase at a quicker rate. But at some point in the future, they're going to have to scale that. So they're going to have to increase their revenue at a much greater rate than their sales and marketing. They also mentioned they may use a portion of the net proceeds to acquire complementary businesses, but they don't have any agreements at the moment about that. And then right at the end, they just say they might put their money into investment-grade interest-bearing instruments. So that's just sort of the thing. If we've got all this money at hand and we don't know what to do with it, we just put it into an interest-bearing instrument. So I'm not sure how much interest they'll get with that. But, at least they have some sort of plan. So I would have preferred some more plans, some more specific goals here, but they have a lot more flexibility with their cash. Valued at $70 billion, you could say they're growing at a phenomenal rate, but it's really richly valued to perfection at the moment. So good luck with them. I would like to buy this company at some point, but not at the current valuations they have. Now, mind you, I've thought the same things in the past about some other companies, and they've just kept on going up in price. So that's all for today about Napier Invests. Hope you enjoyed this video about Snowflake, one of the newest IPOs on the New York Stock Exchange. If you have any questions, just leave it in the comments. Make sure you subscribe. And I'm not a professional at all. So if you do need professional advice, make sure you speak to a professional. That's all for today. Have a good day. See you later.